Good morning, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, August the 26th, 2025. Stock market, well, I just jumped right past it. Stock market has been open for almost exactly 30 minutes right now. And we are this morning so far in the midst of a very flat day. And when I say very flat, I mean very flat day. The Dow Jones Industrial Average right now, as we're about 30 minutes in, and this, of course, with about anywhere from a 30-second to maybe a minute delay. The Dow shows down 547. On my TV screen, I'm showing down $1.82. And now just barely into positive territory by a few pennies and back into negative territory. It's safe to say that in this first 30 minutes of trading, the Dow Jones Industrial Average has just been incredibly flat. This one day intraday chart for this first 30 minutes, this up and down, there's your spot where it's positive or negative, and you can see it's just been, back and forth and back and forth and back and forth. It's gone up a little bit, it's gone down a little bit, but it's mostly sitting really, really close to that flat mark. Same thing is going on with the S&P and with the NASDAQ. The NASDAQ's just fractionally in positive territory right now. S&P just fractionally in positive territory. But this is a very, very flat market right now. No getting around that. And I expect, or I suspect maybe, that we remain somewhat flat throughout the day. It is possible that in about an hour from now? No, I guess right now, because that's Eastern time, we should be getting the consumer confidence numbers. And it's possible that a really big miss or a really big win on the consumer confidence numbers could sort of tip this market into something just a little bit more bullish or a little bit more bearish. I'm kind of anxious to see when the actual number comes out and what that number is. With the lack of any really big news, let's see. Here's the well, there you go. It's really small up in the top left part of your screen, but it says consumer confidence. Forecast was 96.5. The previous month was 97.2. It came in at 97.4. So that's a little bit better than what was expected. Not by some massive, huge margin, but it's possible that as that news gets absorbed, you could see things move a little bit more positive. The NASDAQ is just, a tiny bit into positive territory, but so far it looks like consumer confidence numbers have not dramatically moved the needle. Stock market. As I look at our open portfolio, I see AMD having a nice day. Seems to be coming a little bit in and out this morning, so apologies if you get some little gaps in what you're hearing. Meta was down several dollars a share in the first few minutes of trading. They're only down about $2 right now and still trading above the 750 mark that we need them to. They're about $1.50 above that mark right now. Microsoft down a little bit, which for the open portion of our trade is good. Nvidia up a little bit. Palo Alto Networks up a little bit. Palantir up a little bit. Snowflake up a little bit. More of what we're trading is up a little bit than down. The Home Depot and Meta being the only exceptions, and Microsoft and none of those. None of those are dramatically moving the needle. I think from start to finish today is going to be kind of quiet, and that's okay. I want to. So yesterday in the afternoon, I did one of the longer podcasts I've done in quite some time. I think we were almost 45 minutes when all was said and done. I'm not going to do nearly as long a podcast this morning. In fact, if we go a full 10 minutes, that'll probably be about all this is. I do want to comment on something as it relates to a couple of our open trades, and specifically some of these long iron condors we have done recently. On the triple play side of things, we've had a little bit of a run that has been ugly compared to what most of the year has been. We've had a very good track record of trades. Okay, I just got another thing that says my audio was temporarily disconnected and now it's reconnected. Um, yeah, I'm having a hard time with. I think I'm back now, but I'm having a hard time. I'm not sure what's going on. My internet connection seems to be a little bit sketchy, a little bit off and on, and I'm not aware of any construction in my area that might be specifically the cause of that. But we have had a little bit of rainfall the last couple of nights, and sometimes when we've had such an absence of it, a little bit of rainfall can mess with things. A wire somewhere might be getting a little bit wet. Anyway, hopefully we'll stay connected now. But again, apologies if it comes in and out a little bit. So here's kind of what we've had going on with a number of trades. We've done a lot of long iron condors recently, where we do long call, short call, long put, short put, and our expectation is that when we get an earnings report, we either get a move well above the short call strike or we get a move well below the short put strike. And what we've had happen with a number of trades is we get a really good move right after the report in one direction or the other. And then later the same day or the very next day, we're moving back in the opposite direction, whether that be a move to the downside and then a move back up, or a move to the upside and a move back down. And it makes it challenging with these long iron condors when you get a reversal. There's no better example of this, although it's happened on a number of different trades, but there's no better example than Dash when we got that earnings report and we had this big move up on the day of earnings, more than far enough to make our trade profitable. But a lot of us did not get out of the trade on that day. And then we had a couple of days of big sell-off, and then one big day up, and then another couple of days of big sell-off. And what happened is a week after we opened the trade, we're trading in a range that is, in between where our long call and our long put were, and it became incredibly difficult. All right, there we're back. This is frustrating, and on the recording, I can clean this up a little bit and probably make a couple of clips in the audio file that will make this seem a little more seamless. But for those of you that are on live, my apologies. There's definitely an issue with the internet this morning, kind of the in and out. Anyways, let me. Here's the reason I'm talking about this. We've got a long condor open right now on Nvidia, and we've got one on Snowflake. So, and actually two different ones on Nvidia. In the morning yesterday, I sent out. All right, folks, my apologies for some technical difficulties. I think my internet is back. I think it's managed to show that it's somewhat stable for the last few minutes. So I'm going to finish this podcast. I don't think I have the ability to draw on my screen like I normally do, but I'll be able to change screens and let you see what I'm talking about. I was talking about Dash, and I was talking about how challenging it has been with some of our long iron condors recently. One of the ways to remedy this is when we get into a long iron condor a day or two prior to an earnings event, sometimes 3 or 4 days prior to an earnings event. If we have enough movement up or down prior to the event itself, that we can get out with between a 5 and 10% profit. Now, this is oftentimes when we are targeting initially a profit of maybe 25 or even 30%. If we can get 5 to 10% in the lead up to the earnings report, we need to start being a little more assertive and taking that profit. We need to look at that as a little bit of a gift and say, here's an opportunity to get something out of this trade. And even though it's a smaller profit, it's something that would be beneficial and sort of remove that possibility that we get a movement in one direction or the other that just takes the stock price back in between the strike prices of the long put and the long call. So on the Nvidia trade specifically, and on the Snow trade, Snowflake Incorporated, that we set up yesterday, both report earnings tomorrow after the market closes. In both cases, we're going to look to possibly get out of the trade if we could do so for something between a 5 and 10% profit prior to the actual earnings report. And then if not, we're going to watch what happens on Thursday morning and not be greedy. And what I mean by not be greedy is if we get a chance after the earnings report, if we see movement that takes us into profitable territory by 10, 15%, 12%, 8%, something like that, we might just grab it so that we don't risk something different happening on Friday. Friday is critical because we have the PCE report coming out on Friday, and you could have everything moving after Nvidia's report tomorrow at the close of the market. You could have everything moving in one specific direction as we go into, the rest of the day, Thursday's trading, and then something could happen with the PCE report, good or bad, that could completely and totally reverse it. And then all of a sudden we would potentially be in a little bit of trouble. And so we've got to take that into consideration and watch that. Getting it right, racking up a handful of 5, 10, 15% wins on trades, even at the expense of not picking up the 20 to 25% we want, would be a smart thing. Now, with that said, Nvidia, Snowflake, other trades we have, if we're getting a really big movement in one direction and it just looks like it's going to continue to go in that direction, we don't want to be too quick to jump out. And that's where the balancing act comes in. We need to find a way to be smart and be prudent and maybe take what's given to us early on. But at the same time, we need to be smart in the sense of, not getting out too quickly and passing up a better profit if things are moving very nicely in the direction that we need them to, and by maybe a bigger margin than what we thought would happen or what we expected. So we're going to be a little bit quicker on the trigger, so to speak, when we close these trades. Now, one last thing that I want to talk about, because this could have a big impact on what goes on over the next several months. This headline on CNBC right now, Trump tells Fed's cook she's fired. She says he has no authority to do so. The reason this story has some significance beyond just the politics of it is that if Trump was successful in removing Cook, and I personally, I'm of the opinion that she is the worst choice ever for a Fed gov position. I think in many respects, Powell is the worst Fed chair we've had in my lifetime. I think Cook is absolutely the worst Fed gov pick, period, full stop. She was a DEI hire only. Look, anyone that accuses me of racism is going to pick a fight with me because I don't believe I have a racist bone in my body. But she was put into that position because she is a woman and because she is African American. She had no other redeeming qualifications that rose to the level of her being a Fed gov. She was a pure DEI hire, and she's horrible. She holds some incredibly racist views. It's sad to me that she was ever allowed to be in that position. That alone is not a reason to fire her. Just the fact that maybe she shouldn't have been put there in the first place. That's not a reason to fire her. But every appearance right now looks like she is guilty of committing mortgage fraud. And when you're in a position, when you're in a high-profile public government position where much of your job, much of your responsibilities and duties deal with interest rate, which affects mortgage applications and mortgage approvals, you've got to be so squeaky clean on that. And she deserves her day in court. I'm not going to sit here and say that she's automatically guilty of what she's been accused of. Right now, the evidence looks very strong that she is guilty of mortgage fraud. Trump has the ability to fire someone for cause, and I think he has cause right now in this type of position. He has the ability to fire them for cause, and I believe he has adequate cause to do that right now. She's being defiant. She's saying, no, he doesn't have the authority. I guarantee a liberal judge somewhere is going to issue an injunction and say Donald Trump does not have the authority to fire her, and it's going to go to court and maybe go all the way up to the Supreme Court. I'm not sure what the Supreme Court can do in this case other than say that the cause is valid or not. They might say that he doesn't have cause until she is proven guilty and actually convicted, not just accused, but actually found guilty of mortgage fraud. And that could make this drag out for, 6 months to a year. But in the meantime, let me just finish on this note. When you are in a position of high public profile, it's not just that your actions have to be squeaky clean, and this doesn't mean you don't deserve your day in court, but you've got to avoid the very appearance of impropriety. Now, I'll be the first to admit that's one of the things Donald Trump has had an issue with in his political career over the last 10 years or so, is that he has done some things and he has said some things that have oftentimes had the appearance of impropriety, whether later on he's been proven completely faultless or whether later on there's still some suspicion of that. So I'm not being a hypocrite in saying that this standard only applies to her. Donald Trump was elected to his position, and that is a little bit different because in spite of some of the things he has done and said, the people of this country still chose to elect him. Cook has not been elected. She was not elected anything. She was appointed. She was appointed by a president who we now know was not in charge of much of what was done during his presidency, and that's not debatable. Don't pick a fight with me on that. That is not debatable. Joe Biden was not calling the shots on much of what took place during his presidency, and not only that, but she was a horrible pick, even if he's the one that exclusively made the pick. Even if it was 100% his decision, it was still a horrible, horrible pick. And I wish there would have been more people in Congress that fought against her appointment. But I do believe because of the appearance of what she has done and the fact that she's not elected, she is appointed, I think the president is within his rights to fire her. Now, why does that, everything sounds political so far. Why does this make a difference as it relates to trading into your portfolio? If she is removed, Trump has the ability to appoint someone in her place, and there would be it's kind of like the Supreme Court. There would then be a slight majority of Fed govs who were appointed by Trump and who are more dovish and more likely to want to cut rates and see maybe some, a series of rate cuts. And while that could be a little bit of a challenge for the inflation, I think it would spark the economy to another level of growth that we have not seen since Trump's last term. So it does have an impact potentially on markets. It does have a potential impact on your portfolio if he is successful in removing her. And I do think the process is going to take minimum 6 to 9 months. I don't think that, but her term is set to go until I think. I want to say like 2032 or something like that. Fed govs are appointed for 14 years, which I'm not sure I like that. So I think based on when she was appointed, I want to say 2022, she's got until maybe 2036 or something like that. If the process to get her out of there and appoint someone in her place took even 9 months to a year, still, it tips the balance of the Fed govs in a direction more favorable to the president for at least his second 2 years of his presidency and for many years beyond that. So it is a big deal, and it will affect your portfolio, and it will affect what goes on in the markets in the medium to distance future. So keep an eye on this story. It's worth watching. I think she is going to remain defiant. I think she's going to have every Democrat politician telling her, don't cave, don't resign, don't give in. And then you're going to have initially it's going to be a federal district judge is going to say Trump doesn't have the authority. And then you're going to have that appealed. And then a circuit court of appeals is going to say, yes, he does have the authority. And then it's eventually going to make it to the highest appellate level, which is the Circuit Court of Appeals, probably the circuit that exists in D.C., which is so biased against Donald Trump that even if the evidence doesn't justify it, they will say that he cannot remove her. Then the Supreme Court is going to have to weigh in. And like I said, I believe the Supreme Court is simply going to say he can't remove her until she is actually found guilty or found innocent. And then he could determine whether she's removed for cause or not. And the cause wouldn't be there if she was found not guilty. I think the case is open and closed. I think she has committed mortgage fraud. And I say that not just because of the accusation, but because of the evidence that has already been shown to the public. She lied on a mortgage application and did so to get more favorable terms on a second home. And that is mortgage fraud. And it looks to me pretty clear cut. So we'll see. We'll see what happens. All right. I'm going to wrap up right there. I'll do a little bit of splicing and dicing to get this online. Hope everybody has a good rest of your day. And we'll be back tomorrow, hopefully with no interruptions at all in our recording. Thanks, everyone. Bye-bye.